NVIDIA's performance in the first quarter of fiscal 2027 is a study in raw scale. The company reported $81.6 billion in revenue, a figure that represents an 85% year-over-year growth trajectory. This chart shows the massive amount of cash the company is funneling back to its shareholders. They've increased the quarterly dividend from a single penny to 25 cents, backed by a staggering $80 billion stock buyback authorization. Yet, in the middle of this financial surge, NVIDIA abandoned its traditional reporting structure. They've completely redrawn the map of how they explain their business to Wall Street. For 25 years, NVIDIA's identity was tied to computer graphics. Now, those gaming roots have been moved into a new, broader category called edge computing. Simultaneously, they took their most significant division, the data center business, and split its revenue into two distinct new streams. This reporting shift provides a specific breakdown of NVIDIA's new priorities, offering a look at exactly who is buying the chips and where that hardware is physically being deployed. This donut chart tracks the $75.2 billion generated from data centers last quarter. Exactly half comes from hyperscalers, tech giants like Google, Meta, and Amazon, building centralized cloud networks. The remaining 50% flows from ACIE, independent AI clouds, industrial clients, and large enterprises. This secondary market is being driven by sovereign AI. Entire countries are now purchasing hardware in bulk to build domestic infrastructure for national security and local economic needs. The customer base for high-end silicon is expanding rapidly beyond Silicon Valley. Government data centers and national research facilities are now competing for the same hardware as the big tech firms. AI is decentralizing. It has shifted from a concentrated research project into a required baseline infrastructure for any nation-state aiming to maintain its technological sovereignty. This brings us back to the new edge computing category. NVIDIA is now grouping its legacy gaming business with advanced robotics, autonomous vehicles, and next-gen AI PCs. The catalyst for this grouping is agentic AI, software capable of autonomously taking physical or digital actions to solve complex problems. Powering these autonomous agents requires a change in hardware. While older AI servers relied almost exclusively on GPUs, agentic workloads require a much higher ratio of central processing units, or CPUs, to handle complex tool use. NVIDIA is answering this with their upcoming Vera Rubin architecture. This system is designed to integrate their custom CPUs directly into the server environment, drastically shrinking the gap between graphics and central processing. By capturing the entire physical server rack, NVIDIA is positioning itself to dictate the hardware standards of an autonomous, agent-based future. Despite the massive earnings, the company faces significant vulnerabilities, particularly regarding geopolitical tension in the East. Due to U.S. export restrictions, NVIDIA reported zero revenue from their Hopper generation chips in China this quarter. This blockade is forcing China to aggressively fund and build its own domestic, closed-loop silicon ecosystem, creating a powerful long-term rival. Simultaneously, NVIDIA's largest customers, the hyperscalers, are designing their own custom chips to reduce their reliance on NVIDIA's pricing and supply chain constraints. NVIDIA is under pressure from two sides. International trade wars are closing off markets, while their most lucrative clients are evolving into their most direct competitors. Jensen Huang has structurally pivoted NVIDIA from a chip designer into a full-scale infrastructure provider. The market is moving past the phase of simply training models. The economy is now shifting into inference, the day-to-day work of running those models inside thousands of enterprises. This shift changes NVIDIA's financial character. They are becoming a mature, compounding asset, built on the predictable demand of the world's computing needs. The long-term trend line for their free cash flow has stabilized into a steady, upward trajectory. This financial stability is what enables the massive $80 billion buybacks and consistent dividend hikes. NVIDIA is establishing the foundational power grid of the digital age, operating with the reach and stability of a global utility provider. With a projected $400 billion in free cash flow over the next 2 years, NVIDIA holds the capital to finance an infrastructure build-out that will define the modern era.